The way the Fed has been cutting rates, inflation trends, Sahm's rule, yield curve, it's all very similar to 2007 and 2008. Does this all look familiar to you? Let me explain how 2007 and 2024 looked eerily similar, but will 2025 be another 2008 great financial crisis? Let's break it down. Hey everyone, it's James Santiago and you're watching Learn Wealthy. Let's talk about how history might be repeating itself and why you should care. In 2007, the Federal Reserve, started slashing the Fed funds rate on September 18 with a 50 basis points rate cut. Fast forward to another September 18, but this time 2024, the same thing happened and the Fed slashed 50 basis points on the Fed funds rate. On October 31, 2007, the Fed cut another 25 basis points. Similar to November 7, 2024, we saw another 25 basis points rate cut. On December 11, 2007, the Fed cut another 25 basis points, bringing the Fed funds rate down to 4.25%. And yesterday, December 18, 2024, the Fed made another 25 basis points rate cut, bringing the Fed funds rate to 4.25%. And what happened after 2007? We had 2008, a year many still remember. I was about 20 years old then. In 2008, the Federal Reserve made a series of rate cuts that eventually brought the Fed funds rate down to 0%. We saw multiple bank crashes and bailouts and rising unemployment, which started out low at the beginning of the recession, but spiked during the recession. Foreclosures surged. Real estate tanked, with house prices falling from an all-time high, as shown by the Case-Shiller Index, and grinding down until bottoming out in 2012. The Buffett Indicator, stock market capitalization to GDP, signaled that the stock market was highly overvalued in 2007, and the market crashed in 2008 and did not recover for years. Let's look at the similarities today. The Buffett Indicator is at an all-time high right now, signaling a stock market bubble. Same. The Case-Shiller Index again, pointing to a real estate bubble. Unemployment remains fairly low right now, just like it was before the 2008 recession. Before 2008 recession, inflation was also trending up. Before the 2008 recession, the 10-year and 2-year Treasury yield curve inverted, then uninverted, and the recession followed. And for the last couple of years, the yield curve has been inverted and recently uninverted. And we know what tends to happen after that. I'm not saying 2025 will be another 2008. I'm just looking at the data and the probabilities. What does this mean for you if another recession happens? If you're an employee, well, unemployment rate goes up during recessions. So consider how you can make yourself more valuable to your employer. If you're a business owner, as you know, a lot of businesses close and file bankruptcy during recessions. Double check, triple check your balance sheet and make sure your intangibles are strong. If you're an investor, remember in 2007, we went from a stock market bubble, based on the Buffett Indicator, back to reality. Position a part of your portfolio based on your conviction about a potential recession. Study the data. For real estate investors, remember the Case-Shiller Index showed a real estate bubble in 2007? And we saw the real estate tanking that lasted for years. Right now, according to this Case-Shiller, we are in a bigger real estate bubble. But people are saying we can't have another 2008, we can't have another housing crash because supply is low. But remember, supply has been increasing this year, and a surge of unemployment that hasn't happened yet could change everything. Yesterday, the major indexes, the Dow, the Nasdaq, and the S&P crashed by thousands of points just about an hour before the Fed announced the 25 basis point rate cut. A lot of stocks and companies have also gone down in value. Funny thing is, I sold one of my largest stock holdings the day before. I didn't even know that the market would tank during the Fed announcement. Plus, usually rate cuts make the public bullish, thinking it's stimulus for the economy. But why did I sell? Just luck, for personal reasons. Alright, fine, I'm willing to share this to my Learn Wealthy community. I recently just found Jesus. I'm not kidding. And don't worry, this channel isn't going to be about religion. And I'm not trying to convert anyone here. But prior to that day, I decided that I didn't want to be involved in companies that don't align with my values. One of my largest holding was in Altria, a leading tobacco company known for brands like Marlboro, Financially, Altria is great with a 7.3% annual dividend yield, last I checked. But now I believe in aligning my investments with my values. I guess Altria is one of the biggest tobacco companies in the world, and they're connected to brands like Marlboro. And I didn't want to align my money or my brand. I'm just making my personal choice. And there are plenty of ways to make money anyway. So back to the topic here, regarding the similarities. At the end of the day, just look at the data. I'm not trying to tell you what to invest in. I'm just giving you the data. So look at the data, but also understand the psychology of the majority, which is probably more important, and then allocate your portfolio accordingly. That's all the time I have for today. For more finance, investing, real estate, and macroeconomics, let's all learn wealthy together. I'll see you in the next video.